Global stock market benchmarks are heading toward record highs after the Federal Reserve signaled this week that its rate-cutting cycle is still ongoing, paving the way for a year-end rally. Dow Jones futures rose 0.14%, S&P 500 futures fell 0.18%, and Nasdaq futures fell 0.61%. The European Stoxx 600 index rose as much as 0.5%, hitting a record high. Asian stock market composite indicators are less than 2% away from their all-time highs. S&P 500 futures edged lower after the benchmark index hit a record closing high in the previous trading session, with the Dow Jones Industrial Average and the U.S. Small Cap Index also reaching record highs. Broadcom shares fell 4.8% in pre-market trading after its sales guidance missed high market expectations. The company is competing with NVIDIA for revenue related to artificial intelligence computing. Nasdaq 100 futures fell 0.6%. Meanwhile, Oracle's massive spending on AI and weak earnings guidance deepened market doubts about when its huge AI investments would pay off, triggering a sell-off in tech stocks the previous trading day. Melius research analyst Ben Reitzes said, "At this point, many companies' AI spending plans are still very large, and it's too early to press the panic button." Despite the relatively lagging performance of the technology sector, stocks rose overall on Friday, indicating that the current rally is spreading to a wider range of sectors and pushing global stock indices on track for their third consecutive year of gains. Karen George, fund manager at Ecofi Investissements in Paris, said, "Almost everyone is convincing themselves there will be a Christmas rally at the end of the year. So it looks like it is. Frankly, there are no significant negative catalysts before the end of the year. Investors are keen to buy assets that have underperformed this year, and now is a good time to diversify portfolios." Federal Reserve Chairman Jerome Powell stated on Wednesday, when announcing the third consecutive interest rate cut, that the U.S. economy is expected to strengthen further as the inflationary effects of the economic downturn gradually subside. While officials maintain their official forecast of only one rate cut in 2026, traders are still betting on two. The dollar index, which measures the dollar's performance against 6 major currencies, was flat at 98.34 and is expected to fall 0.64% this week. The index has fallen more than 9% this year, on track for its biggest annual drop since 2017. The yield on the 10-year U.S. Treasury note rose 1 basis point to 4.17%. Investors face significant uncertainty regarding the path of U.S. monetary policy next year, due to the continued uncertainty surrounding inflation trends and the strength of the labor market. Traders are currently pricing in 2 rate cuts in 2026,